What is up? Good morning, everyone. October 11th, right? It is Wednesday. We're halfway through the week, and we got our first bit of information here. The inflation data that came out today. Today is the PPI number in itself. And what we got going on from there was the PPI this morning pre market. Then tomorrow we have the CPI that kind of wraps up the inflation data for what we got going on today. Or sorry, this week, I should say. So the PPI data, it came out slightly higher than expected. So remember, slightly higher inflation data suggests that inflation is on a little uptick over the last month of data that we've been seeing. So the PPI data, if this manages to load here, right, just as I need it, things don't load as they should. But the PPI data came in at a slight pop on the expected for the year over year, the core year over year, and as well as the month over month. So I'm just going to look at this on my phone because for some reason on my computer doesn't. So the PPI data, the year over year came out at 2.2% versus the 1.6 expected, and the prior was 1.6. So pretty big increase in that. That's the year over year number. The U.S. month over month, the PPI that came out at 0.5% versus 0.3% expected, and 0.7 in terms of the prior. So drop in terms of the prior, but it exceeded the expectations. Now the year over year core, right, 2.3% was expected. We got 2.7%. As well, right? So again, a slight little pop on that we saw on that data. So the inflation data that came out from the PPI was a slight increase in terms of expectations, as well as an increase in terms of the prior months, where it initially put some downside pressure in the market that could quickly bid back up. We're trading in a larger range right now where buyers are stepping in, and I'm leaning towards seeing a little bit of bullishness on today's follow through as well. Yesterday, I wanted to see the bulls, but I wanted to see a pullback. That pullback like barely came. We got nothing, 7 points off the open before we started rallying into the rest of the day. Today, right, these bulls can really take this over again, right? They're looking for some more upside as it seems. And at the end of this update, I break down what my thought process is on the futures market and where we could go from there. But first and foremost, right, CPI tomorrow, it's going to be the bigger event. The consumer price index that comes out pre-market, we're going to be trading it with our team before the open. I think that's going to have a larger impact on the moves of the market, the expected next move of the market, and we'll get a better reading of what it is in terms of inflation, right, and going forward, and the expectations. So what we got tomorrow is going to be very important, but oil is on the news, right? It's in the news right now. If we take a look at, whoops, wrong thing here. Let me just move this onto this screen. And oil, right? Why is oil in the news? Exxon Mobile has agreed to acquire Pioneer Natural Resources, ticker symbol PXD, for more than $253 a share, and it's an all stock transaction valued at nearly $60 billion, almost $6 billion for this. So for Exxon, a deal would add valuable acreage near some of its own fields to make it a dominant producer in the Permian Basin, right? So Pioneer is the largest Permian operator at 9% of gross production, while ExxonMobil is number 5 at 6% gross production. So the acquisition is a second in recent months for ExxonMobil after it managed to snatch up ticker symbol Denbury Resources, for almost $5 billion in an all-stock deal in July. And Exxon has been flush with cash since earning a record $56 billion in profit last year, and has set aside tens of billions of dollars for merger and acquisitions. So while investor and political pressure has mounted on Exxon in recent years to shift towards a more renewable energy strategy, the CEO, Darren Woods, has stuck to a heavy oil dependent approach, setting a 1 million barrel per day target in the Permian that will easily be reached with the latest deal. Right. So oil, with the upside pressure in oil and increase in demand, a lot of people are looking at oil with some crazy price targets to the upside. But realistically, I still think that $100 oil is possible this year. But a lot of people talking about $150, $200 oil. I think that's a little outrageous. But I think that push side on the upside, and demand for oil is still on the uprise. So Exxon's really playing aggressive on that front rather than trying to transition to renewable energy, trying to pump as much money out of this as possible. So acquiring Pioneer would be an assertive for Exxon Mobil due to the valuation difference and potential synergies. And This could be called a crown jewel for Exxon Mobil, right? So this is what a lot of analysts are talking about. Discusses also other oil aspects. So Exxon Pioneer deal could likely jumpstart a merger and acquisition in the Permian with ConocoPhillips, right, looking at a potential deal across the shale patch. Chevron was also interested in Occidental Oxy. That's Warren Buffett's like number one of the largest producers in the basin in the early part of the year. So the oil giant has reportedly moved on to smaller targets. Permian producers saw gains last Friday following news possible that the Pioneer deal, including Permian Resources and Diamondback Energy, Coterra, and Devon Energy, right? So all those rose, as we've also seen the large pops in energy, right? So I'm trying to find here. Where is my other screen? I want to see what oil is trading at right now. Some of these things, absolutely ridiculous. I might as well just check on my phone if this is going to load for 17 centuries here. I don't know why I have this computer at all. Let me see. So CL oil WTI futures are down slightly right now after a gap higher on the Monday open after the attack in the Middle East. So this could be the potential smaller pullback. I'm still a little more bullish on oil into the end of the year, and these merger and acquisitions, right, are theoretically indicative of the potential demand increase in hikes in oil prices. That's why they're appearing realistically. So the other aspects of news, right? Treasury yields, uh, treasuries, bonds. Again, let me see what the bond price are right now and yield prices, because it's been a common theme, right? The U.S. 10-year is one of the most followed aspects, and right now we've been pulling it down pretty aggressively after we popped that 4.8% level, and we could be topping out, right, which putting upside pressure in the bond market. And treasury yields, right, they continue to drop. They continue to sink across the board as traders seek safe haven assets amidst the Israel-Hamas war, while equities ran higher as the Federal Reserve signaled that the rate hikes are probably going to be over. We saw Neil Kashkari talking, one of the Fed chairs, that called for a recent jump in the 10-year Treasury yields. Perplexing, right? Sorry, I got to sneeze. Excuse me. He called this pop perplexing, right? But noted that the odds of a soft landing look pretty favorable. Atlanta Fed President Raphael Bostic also didn't expect more rate hikes and was a little bit surprised by this drastic pop in yields as well. Um, while Fed Governor Christopher Waller stressed that the central bank would stay on the job to reach its inflation targets, and markets now await the Fed minutes due this afternoon for further clues on policymaker views. Also on deck today is the producer price report, right, that we saw this morning. But the downside press on yields is going to put some upside pressure in bonds. I don't necessarily think that the bond market is out of the bear market. I think there could be a little more to go before we find that bottoming, right? Pops here and there and cyclical rallies are to be expected over the next few months. But realistically, we do need to see a lot more downside in yields. We need to see yields like get crushed under 4.5%, right? 4.4% on the 10-year for any of this to be meaningful realistically. So I did take a couple of positions on TLT. I was looking for the TLT longs, bought a couple of $100 calls for August, so they're doing okay right now, gapping a little higher. But I think that the bond market is due for a slight little pop, nothing too drastic, nothing too crazy before the sell side does eventually continue realistically. So when we talk about what's going on in this equity market right now, right, we had the PPI report here, and I'm going to take a look at the S&P 500 futures with you guys. Comment down below, right? Would it be? I think it might be more beneficial if I get a stream, maybe like an OBS stream where you guys can see the screen while I do these updates, so we can talk about different trade opportunities, show you a visual of it, right? I think that'd be pretty cool. So look out for that. Maybe in the next coming weeks, I'll find something that looks pretty interesting. But Right now, for now, right, the futures had a little drop and pop based on the PPI data, right? We rallied from the mid 90s, which is a huge order flow level that you guys have to understand for today. A lot of volume has built up there as well. And then we have a key order flow resistance around 440304 area that we have above, right? So the 10s are looking like they're kind of impactful right now as well. But the way I'm looking at this, the way I'm seeing this is that we have some general resistance around that 20, a large resistance around the 20 above. So I'll be looking at the futures in that regard. I want to see if we can actually hold this mid 90. I want to see if they can hold a bid from 4,400 to get us into the 20, to get us a little more above, to put some more downside pressure in this market where we have late longs coming into the 40s, coming into the high 30s, the mid 30s. But right now, I am leaning a bit more bullish to see if we can get another follow through movement before any of the real sell side opens up. The real sellers, right, they appear under the low 90s, mid 90s on the futures. That's the main area that I'm going to watch to see some sell side, but into the 20 as well. That's another region. We're in a balance right now. We're in the middle of yesterday's range. Realistically, we're holding balance between low 90s on the futures as well as like the 4,404 area, let's say. So that 10-point region, 12-point region is a very large balance for price to see how buyers and sellers kind of interact from there. So very balanced to start. Wait for some kind of extension, expansion of a movement, right, to see what side holds control. I'm leaning a touch more bullish on the session here today to see if we can get legs up, maybe back into the 20 or into the 40 mid 30s before we can see some more adequate selling. That's the thought process that I'm leading with today, right? Things change if we start running below those 90s. So keep that in mind. And what we're going to do is open up our live futures trading room for you guys right now. So check that out at TradePro Academy. And I'll see you guys tomorrow. Have a wonderful midday week. And I don't know what the hell that was. Have a good Wednesday, and we'll see you tomorrow. Check out community.tradeproacademy.com for our free Discord as well.